Thank you very much for joining me here today. To start off, China's struggling economy is being hit harder with deepening deflation. Last month, customer prices made its steepest drop since the pandemic. New numbers revealed the consumer price index fell 0.5% in November compared to last year and compared to October. Now, this is according to data from the National Bureau of Statistics, and prices have been falling across the board. Food prices are down, particularly with pork, which plummeted nearly 32%. Severe inflation also took a dip. Chinese consumers have reduced their spending amid economic uncertainty. While China has been struggling with sluggish demand, also it's dealing with mounting local debt and a housing market slump as well. The drop in prices has prompted calls for Beijing to act and boost demand. Officials are expected to meet this month to talk about the economy and publish new plans for growth and economic policies. And meanwhile, Chinese chip designers, including Tencent Holdings, are aggressively pitching their AI chips as alternatives to NVIDIA's. Now, they're hoping U.S. export restrictions will prompt clients to switch. This is according to 4 people familiar with the discussions. Here's more.
NVIDIA has a battle on its hands in China. Reuters sources say chip firms there are moving aggressively to take sales from the AI market leader. That after US export controls restricted its shipments to China. NVIDIA currently has around 90% of the market for AI-related chips in the country, but rivals see an opportunity in the export curbs. Right now, Huawei is seen as the biggest challenger. Its latest chips are competitive on at least some metrics. Chinese search giant Baidu has reportedly placed a big order for processors from the firm. Gaming company Tencent is making its move too. It's been pushing services that use an AI chip it developed with startup Enflame. The silicon is said to offer performance comparable to some NVIDIA products. Tencent is reportedly touting it as a cheaper option for things like image and speech recognition. There is also competition from a host of smaller players like state-backed Hygon Information Technology. Speaking last week, NVIDIA chief Jensen Huang acknowledged the challenge and called Huawei a formidable rival. But analysts say the would-be competitors could struggle with production even if they can win sales. That's due to how US curbs make it hard for big chip foundries like Taiwan's TSMC to work with Chinese firms. Even so, some industry experts think Washington's export controls could backfire. One analyst told Reuters that, far from being hobbled, Chinese firms were just being spurred to redouble their chip development efforts.
Inflation cooled again, and it's potentially easing financial pressure on U.S. households overall. The consumer price index dropped down slightly to 3.1% in November compared to the year before. It's slightly lower than October. This is according to the latest report from the Bureau of Labor Statistics. But when the more volatile components, food and energy, are removed, the core index actually rose 4% year over year. The increase is largely due to the sharp rise in shelter or rent costs. And on the other hand, gas made a drastic drop in November. Inflation is still far from the Federal Reserve's target of 2%, but economists are confident that after the central bank's meeting this week, they will leave rates unchanged. And U.S. stocks registered modest gains on Monday, but managed to close at new highs for the year ahead of major market catalysts this week. And those include inflation readings and the Federal Reserve's policy announcement, which will strongly influence investor expectations on the path of interest rates. Here's a quick recap of markets.
U.S. stocks inched up on Monday, but managed to close at new highs for the year, ahead of potentially major market-moving factors this week that include inflation readings and the Federal Reserve's policy announcement. The Dow and S&P 500 rose about 0.4% each, while the Nasdaq added 0.2. Market watchers increasingly believe the central bank is done with its interest rate hike cycle and could potentially cut rates in the first half of next year. Taves Asset Management CEO Phil Taves said that and lower yields on 10-year treasuries are contributing to the positive sentiment on Wall Street.
So sometimes it's not what the good news is that causes a rally, but rather a lack of bad news. And I think that's where we are right now. Certainly the fact that the Fed has been on hold, and we hope that they stay on hold, and that the 10-year and other rates have come in so considerably from the high of 5 on the 10-year, as an example. You know, the decrease in things like the 10-year is the equivalent over the past 3 weeks to the Fed lowering about 90 basis points. So it's a significant change, a significant kind of easing in the economy that creates an environment where stocks can drift higher.
Investors will watch the Consumer Price Index data due on Tuesday, which is expected to show headline inflation remaining unchanged in November. While on Wednesday, the Producer Price Index comes out, along with the last interest rate decision of the year from the Federal Reserve. Stocks on the move included chipmaker Broadcom, which jumped 9% after Citigroup resumed coverage of the shares with a buy rating, while Cigna soared 17% after it ended its takeover bid for rival Humana and announced a $10 billion share buyback plan. And Macy's surged 19% after an investor group made a nearly $6 billion offer to take the chain private, according to a source.
Fortnite maker Epic Games has prevailed in its high-profile antitrust trial over Alphabet's Google, which alleged the Play App Store operated as an illegal monopoly. Here's the report.
The maker of the Fortnite video game has won a big battle with Google. Epic Games says the search giant's App Store has operated as an illegal monopoly. It took the firm to court over the matter. On Monday, Epic said a jury had found in its favour on all counts. The California court will now begin work on what remedies to order in January. Google immediately said it would appeal. It denies all wrongdoing, saying its rivalry with Apple's App Store requires it to compete intensely on price and quality. The lawsuit accused it of taking steps to crush competitors, and said it charged excessive fees of up to 30% to app developers. Now the ruling marks a stunning defeat for Google and could upend the entire app economy. Legal experts say it could give developers much more say over how their products are distributed and how they profit off them. Google might be forced to allow alternative app stores to open on its platform. Epic launched a similar case against Apple in 2020. A judge largely ruled against it on that occasion, but the game maker is seeking to have key points of the case reopened by the Supreme Court.
Britain's antitrust regulator said on Friday it's going to review whether to launch a merger probe of Microsoft's multi-billion-dollar partnership with ChatGPT maker OpenAI. It's weighing in on the U.S. software giant's operations for a second time this year. Here's more.
Microsoft is a target for UK regulators once again. Antitrust officials in the UK said Friday they will review whether to launch a merger probe of the US tech giant. It's over Microsoft's partnership with ChatGPT maker OpenAI. Britain's Competition and Markets Authority, or CMA, said it will consider if the OpenAI tie-up has led to the creation of a merger situation. Only then will it decide on an official investigation. The move comes after an announcement last month that Microsoft will take a non-voting position on OpenAI's board. That followed a hectic boardroom battle which saw the sudden removal and return of OpenAI CEO and founder Sam Altman. Sources say Microsoft owns 49% of the for-profit operating company. The firm also committed to invest more than $10 billion into the ChatGPT maker. Microsoft said it will work closely with the CMA. OpenAI did not immediately respond to a request for comment. The same UK regulators looked at a separate competition issue around Microsoft earlier this year. It blocked the company's $69 billion buyout of Call of Duty video game maker Activision Blizzard. But it later changed its mind after Microsoft updated its acquisition plan.
EU lawmakers and policymakers have reached a deal on rules regulating the use of artificial intelligence. This is according to the EU industry chief. Here are the details.
EU countries and lawmakers on Friday agreed to a landmark deal to regulate artificial intelligence. The agreement, which makes the EU the first major world power to enact rules to govern AI, includes rules that governments can only use real-time biometric surveillance in public areas, only when there's serious threats involved, like terrorist attacks. The deal regulates systems such as ChatGPT, which will soon need to comply with transparency obligations before they're put on the market. These include detailed summaries about the content used for training and complying with EU copyright law. Rules also ban cognitive behavioral manipulation on targeted scraping of facial images from the internet or CCTV footage, social scoring, and biometric categorization systems to infer political, religious, philosophical beliefs, sexual orientation, and race. European Commissioner Thierry Breton said in a press conference, quote, "Europe has positioned itself as a pioneer understanding the importance of its role as a global standard setter. This is, yes, I believe, a historical day." The shape of the final legislation is expected to come in the next few days, after EU countries and the European Parliament hash out the details. The legislation is expected to come into force early next year and should apply 2 years after it has been formally ratified. The ambitious rules come as companies such as OpenAI, which is backed by Microsoft, continue to discover new uses for their technology and also cause concern for their far-reaching capabilities. Google owner Alphabet on Thursday launched a new AI model, Gemini, to rival OpenAI.
And the U.S. Federal Reserve could cut rates sooner than expected. This is based on new predictions by Goldman Sachs. The investment banking firm now expects the U.S. Federal Reserve to make its first cut next year in the third quarter. Goldman Sachs is also projecting that the Fed will make 2 cuts. That could mean a rate closer to 4.8% by the end of next year. The firm initially predicted the Fed would start cutting rates next December, but it said it moved up the timeline because of cooling inflation. The Fed is meeting this week, and there's growing expectation that the central bank will pause and eventually stop raising interest rates. Citing new positive data, economists and investors expect the Fed to cut its key interest rate at some point within the next few months. Take a look at what this means for borrowers.
After nearly 2 years of interest rate hikes, relief could soon be ahead for borrowers.
Fed will not hike interest rates further, and for all intents and purposes, this ends the Federal Reserve's rate hike campaign.
The Fed is expected to pause interest rate hikes following its final meeting of 2023 this week. And there's growing speculation that the Fed is close to cutting interest rates, ending its aggressive campaign to lower the overheated economy and tame historic inflation.
The Federal Reserve also needs to understand that we cannot continue to create a social divide of winners and losers with this division widening further and further because it could lead to societal instability.
Despite Fed Chair Jerome Powell leaving the door open for future rate hikes, several recent reports are showing inflation is slowing and the economy is cooling. Citing that data, some market traders, investors, and economists expect the Fed to cut its key interest rate at some point within the next few months.
We don't expect the first rate cut until June of 2024, and we expect 100 basis points of total rate cuts through the year.
The Fed's funds rate heavily influences borrowing costs for things like credit cards, mortgages, car loans, and personal loans. And economists say interest rates could begin to come down even before the very first rate cut.
They already are, as market participants, investors, and other policymakers begin to set expectations about where interest rates will be in the new year and then move throughout 2024.
And the draft language of a potential climate deal at the United Nations COP28 summit in Dubai suggests a range of options, but omits the phase out of fossil fuels many delegations are demanding, which of course includes the US and the European Union. Here are the details.
The draft language of a United Nations deal on climate change, unfolding at a summit in Dubai, does not include language to phase out the use of fossil fuels. Language that is being demanded by over 100 countries, including some top oil and gas producers such as the United States, as well as the European Union's delegation. The summit, known as COP28, has been running for 2 weeks, and the impasse has set up a difficult final round of negotiations. Sources familiar with the talks have told Reuters that the UAE, which is hosting the event, has come under pressure from Saudi Arabia, the de facto leader of OPEC, to drop any mention of ditching fossil fuels. It's left some delegates distraught. This was Canada's Climate Minister Stephen Guilbeault.
I understand, we're the fourth largest oil and gas producer. We get it. It's complicated. It's unnerving. It creates uncertainty in parts of our country. But it's not a reason not to do it and not to tackle this problem. And even if we bury our heads in the sand, it's still going to happen.
Some young activists used hot air to push the conference to act. These balloons spell the word Yalla outside the venue, meaning let's go in Arabic. A Saudi government spokesperson did not respond to a request for comment. Although the language doesn't include ending fossil fuels as is, it does include other options, such as reducing the use of fossil fuels to achieve carbon neutrality around the year 2050, and ramping up technologies that capture carbon emissions to keep it out of the atmosphere. Representatives from some Pacific Island countries, which are already suffering from rising sea levels, such as Samoa and the Marshall Islands, said the weaker language, if it's adopted, is a death warrant.
And more than half of the nation's employees say they're stressed at work, but a new survey finds that some jobs are more draining than others. The 2023 report from Mental Health America's Mind the Workplace listed the top 10 most stressful jobs this year. It includes judges, healthcare workers, including nurses and doctors, general phone and 911 operators, film and video editors, and retail sales supervisors. The job with the highest stress score is urologist, and workers in unhealthy work environments reported higher rates of psychological distress that lead to mental health concerns. Last year, 81% of workers reported that workplace stress affects their mental health. That's up a bit from 2021. About 3/4 of workers said workplace stress affects their relationships as well. And that's all today for NTD Business. See you next time.